Judging from the spot Bitcoin ETF inflows, they're looking very, very healthy. But always bear in mind, because price is always moving in a wave, you want to take advantage of the retracements because that's where the profitability is. And to know where they retrace to, you'll need to know the structure of the chart that you're trading and investing in. For people who want to do the Profiting from CTKS Method Structure course, there's a link in the description. You can get it absolutely free. It's worth US $700, but conditions do apply. What I'm going to do now is to look at row 3 from the cheat sheet. You can see that I've actually put the indicators on from the service. And one thing that you will need to know is how to update the indicators. All you do is basically just click on the right mouse click, and then update this script. Now, I've updated all of these for you because the markets are going absolutely nuts at the current time. So in line of that, it's pretty important to make sure that you know what's above. Now, when we look at the NASDAQ composite, we can see that around that 19,400 level, there's an area of structural overhead resistance. This resistance, we know it's there. And of course, price will come up to that and encounter sell pressure. There's a sell order block there. Where are the order blocks? Sitting inside the S&P 500 chart, you can see there's a fairly major one here at around that 026 level, or 60,000, just around the 60,020 mark. This is a very important level for the S&P 500 to get across. When you look at the Dow Jones, it pushed through a positive CTKS gap, encountered a level of structural resistance, but couldn't overcome the two levels above it. So that meant it was coming to the one below, and that's where it's currently residing at 44,308. One thing that you want to keep in mind, I know a lot of people are saying that there's no intercorrelation or relationship between the main market indices and Bitcoin, but that is simply not the case. There is, of course, an interrelationship between markets, and one of the most critical to look at is the Russell 2000. I've left the structural levels on for you so that you can gain a bit of a comprehension on where the Russell is going to come in to structural overhead resistance. Now, what typically happens if it's got structural overhead resistance, it tends to dip down to a lower level of structure to try to push through it. If it's not successful, it starts to fail. Now, one of the things that we've seen with Bitcoin in the current time period is Bitcoin is moving higher. So that would suggest that the market indices could also move higher. This is something that you want to keep in your mind. The bull market is well and truly upon us, and when we look into Bitcoin's structural levels from the service, we can see this level at 86,800 is pretty important, and also the levels around $88,800. What you've got in here are some positive CTKS gaps and some negative CTKS gaps. What that actually means is the price will move very quickly between those areas because there's literally nothing in there to slow it down. One of the things that you want to also keep in mind, there's overhead structural resistance at 90,600. The bulls will be seeking to bypass this 9,600, and the bears will seek to push it down below 88,600 and then get into that negative CTKS gap, where things could drop very, very quickly and shake a lot of people out of their positions. Sometimes it's difficult to understand what's fueling those up and down price movements, especially in the crypto market, but it's the longs and the shorts. We can see the shorts have been whacked just recently. There's been nearly $700 million worth of liquidations across the past 24 hours, with over 400 being short liquidations. When the shorts get liquidated, they push the price up. When the longs get liquidated, they push the price down. Therefore, what's been driving the price of Bitcoin up recently is all of these short liquidations. Inside the crypto market, you make profit from where you buy, of course assuming you're going long at spot, and that's what we do as a community. Of course you can do your leverage trading if you want, but please be a master of spot first. Now, what are we noticing with Doge? Doge has gone absolutely parabolic. Now, what tends to happen in parabolic moves? We had a parabolic move here and it was cut down. One of the things that you want to be aware of, you're going to get pullbacks in uptrends, and when they come along, you can take advantage of them and trade them absolutely spectacularly. But one of the things that I wanted to do was to just scale out a little bit and show you some of these explosive moves. A lot of people think that it's going up forever and then they suddenly get a very rude awakening. One of the things that you want to be aware of is protecting your capital. Protecting your capital is really important. But Ken, I don't want to hear this. I just want to hear about moons and Lamborghinis and stuff like that. Well, you know, when it comes to going up, it doesn't always just decay backwards. Sometimes it goes a little bit there and a little bit there. So just bear in mind these particular factors. But what you want to do is you want to take advantage of the bull run and take advantage of these retracements in price action. You don't want to buy here and then buy there and then buy there. You want to try to buy around here and around here and around here. It literally will triple your profitability. I know it's not the mainstream thing to say because people just want the up case and the up case only. But if you're going to be realistic, and I would really suggest that you are realistic, get prepared for pullbacks. Because if you get one, what are you going to do when you see one? Are you just going to sell, get shaken out, and then get brought back in, get shaken out, get brought back in? You don't want to do things like that. A lot of charts are doing this kind of thing right at the current time. They're just going exponentially up, and that's what crypto is notorious for. It loves to do exponential price action. That's why the CTKS method was invented, to update all of that old and boring technical analysis stuff that dealt with the old and boring stock market. Yeah, it probably was bold as well. Exponential price action is a sight to behold, and you're witnessing it right now. It is awesome stuff, but please be aware, you can get explosions and implosions. You need to be aware of the other side of the trade. Just thinking it will go up forever is very, how can I say it, not good for your profitability. Now, what do you need to keep your eye on, especially if you're in something like Doge, or it doesn't really matter, they're all going this way at the current time. You need to keep your eye on Bitcoin. So long as Bitcoin is going up and obeying its structural perspectives, for example, structural support and structural resistance, so long as that is happening, you're A-OK. A bullish case will just naturally lead into the different cryptos rallying. But if you start to see pullbacks, that's going to decay price action right across the board. This is really important to understand. In order to be professional, we must be aware of the upside and also the downside, and the structure that actually makes all of that possible. And just remember, if you're looking at an indicator from inside the service and you're not seeing any lines above, just right-click on that purple background and press Update Script, and you're done. Just exactly like I did at the start of the video. Something to just be aware of, when we got exponential price action in early March, we had a bit of a wobble here and there, and then we couldn't make higher highs. If we find that we're doing this kind of stuff again, especially cracking the concrete, please be aware. One of the things that I wanted to point out to you, because I just tell you the facts, and these facts are all structurally based, between about 77.5 and around 80,000, there is incredibly good structural support. So even if we got a wick down there that would tap that liquidity area, we could find ourselves going up quickly again. Remember, profits are made where you buy. A lot of people would say, oh, Ken, I don't want to hear anything negative. That may cause the price to go down. That's not how markets work. They don't care about what we say. And a lot of it is just algorithms, just churning and burning between different levels. But if you could buy around here and sell around here or there, is that better than buying around here and selling around there? The one thing that typically happens on the retail side, people really don't know what they're doing. They're in a market that is incredibly volatile. It all goes up and down very, very quickly, and they're just not prepared for the negative side. If you can get more prepared for the negative and you can end up buying on red, you're going to make a fortune. And always remember, price is always moving in a wave. I love this concept so much, I actually made an NFT, and that's on OpenSea. Rule 4 is very, very important to you. Take advantage of it wherever you can. Please make sure that you keep your eye on the structural levels inside total crypto market cap, because Bitcoin and total will move together. The interesting thing is there is really literally no overhead structural resistance in total at the $3 trillion mark. Often people think that whole numbers are very retail, and they are in truth. But across the entire crypto market, if people start to say there is resistance at the 3 trillion, they're not correct, because there is no structural resistance. And don't forget, structural resistance is different from the resistance that is taught by the vast majority of people. They use recent indicative price. So on a chart like this, there would be resistance here, but there's not resistance there. There's resistance right here. And the difference between knowing where the resistance is, how strong it is, if it's clustered or it's far apart, is very, very important. Have a great day or night ahead, my friends, and take advantage of those retracements. And we look forward to catching you in the next video. Bye for now.